What do you get when Wall Street's bond king and the world's biggest asset manager are suddenly telling everyone to run, not walk, to gold, silver, and even Bitcoin? You get a financial moment worth paying attention to. In the next few minutes, I'll break down exactly why these powerhouses are sounding the alarm, what they're worried about, and what it could mean for your wallet, whether you're a seasoned investor or just curious about what's happening behind the scenes. Let's dive right in. We're talking about Jeffrey Gundlach, the founder of DoubleLine Capital, often called the Bond King for his legendary track record in fixed income. Add to that BlackRock, the world's largest asset manager, overseeing over $10 trillion. When both of these heavyweights start agreeing on something, it's wise to at least listen up. So, what's got them turning away from their usual stomping grounds of bonds and stocks, and instead recommending classic safe havens like gold and silver? Plus the wild card, Bitcoin? The answer, in a word, uncertainty. But not just any uncertainty. We're talking about deep concern over what's called financial repression and the growing risks coming out of Washington. Financial repression is a fancy term, but the concept is pretty simple. It describes a set of government policies designed to keep interest rates low and debt affordable, usually at the expense of savers and investors. Think of it as a silent tax. Governments keep borrowing costs down by paying you less for your savings, all while inflation quietly erodes your purchasing power. Historically, this has happened after big wars or financial crises, when governments rack up massive debts and need a way to manage the bill. Now, Gundlach and BlackRock both see signs that the U.S. is heading down this very path. The U.S. government's debt is at historic highs, over $34 trillion and counting. Interest payments alone are projected to outpace defense spending soon. That's a red flag for anyone who relies on the stability of the dollar or traditional assets like government bonds. Inflation has cooled off from its peak in 2022, but it's still running hotter than the Federal Reserve's target. And while the Fed has raised rates aggressively to fight inflation, there's only so much they can do before something breaks, either in the economy or in financial markets. Both Gundlach and BlackRock have pointed out that in this kind of environment, real returns on traditional fixed income investments might stay negative for a while. In other words, even if you're earning interest, inflation could eat up your gains, and then some. Here's where gold, silver, and Bitcoin come into play. Historically, gold and silver have been the go-to safe havens when people lose confidence in government policies or fear that their cash will buy less tomorrow than it does today. Gold, for instance, has been used as a store of value for thousands of years. During the 1970s, when inflation last ran wild in the US, gold prices soared. Silver, while more volatile, has a similar story. It's both a precious metal and an industrial commodity, so it tends to benefit when investors are nervous and when industry is booming. Right now, with so much uncertainty in the air, both metals have caught the attention of heavyweight investors. Then there's Bitcoin. This one's a bit newer to the scene, but it's quickly become the digital equivalent of gold for many investors, especially those who worry about government overreach or currency devaluation. Unlike the dollar, there's a hard cap on how many Bitcoins can ever exist, 21 million. That scarcity, combined with its decentralized nature, gives Bitcoin its digital gold nickname. Now, here's what makes this moment especially interesting. It's not just the usual gold bugs or crypto enthusiasts making these calls. When BlackRock, the ultimate establishment player, starts talking up gold and even launches a spot Bitcoin ETF, that tells us something has shifted. These are institutions that have thrived in the traditional financial system. If they're hedging with gold, silver, and Bitcoin, it suggests they see real risks on the horizon. So, what does this mean for everyday investors? First, it's a wake-up call that diversification matters more than ever. If the biggest names in finance are worried about inflation, currency risk, or government intervention, it's probably wise to look beyond just stocks and bonds. That doesn't mean you should dump everything and buy gold bars or Bitcoin tomorrow. But it does mean having a conversation, maybe with your financial advisor, maybe with yourself, about how to protect your purchasing power if things get rocky. Second, it's a reminder that financial policies set in Washington can have ripple effects everywhere. As governments grapple with debt and inflation, the policies they choose, whether it's keeping rates low, increasing spending, or intervening in markets, can impact everything from the value of your savings to the price of groceries. And finally, it's a call to stay informed. The world of money moves fast, and the playbook that worked for decades, rely on bonds for safety, stocks for growth, may need to be updated for this new era. So, what do you think? Are you considering adding a little gold, silver, or Bitcoin to your mix? Let me know in the comments. Don't forget to like this video if you found it helpful, and subscribe for more insights on navigating today's markets. Remember, when the bond king and the world's largest asset manager start beating the same drum, it's usually worth listening. The future may be uncertain, but with the right information and a smart plan, you can be ready for whatever comes next.